Westpac outlines a $4 billion profit but says the best times have passed. Federal Treasurer Jim Chalmers set to announce plenty of spending in tonight's budget, but there will also be plenty of programs that have their funding cut or dropped. And the boss of IBM admits that working from home does harm your promotional chances. It's Tuesday, the 9th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. The beginning of a very, very long day for some of us.
Oh, yeah. Did you get any sleep last night?
Oh, no, I was pretty good last night, but it's just tonight, I dare say. Normally when you do our show, listeners probably appreciate we're not exactly night owls. You tend to go to bed pretty early because you're getting up pretty early. Not tonight.
No.
We've got the budget show on late tonight, so it's ready for tomorrow morning. And I might have an afternoon siesta. Maybe that's the idea. Do you know what I've actually found? I've taken to having cinnamon and pineapple tea. And if you have cinnamon and pineapple tea, and I've done it particularly when it's cold, and if you're in Sydney at the moment, you know how cold it is, it actually makes me go to sleep, and I don't know why.
Sean, you know what? I just decided about a minute ago just to let you talk.
Right.
Because I thought, you're just giving me so much good material here. Cinnamon and pineapple tea.
Yeah.
How did you find that? Was that an accidental combination that you accidentally just kind of spilt some cinnamon into your pineapple tea?
I drink a lot of tea, but I get sick of just the normal English breakfast. And so I always go searching out odd flavours, I suppose. Cinnamon and pineapple is my latest.
So you'll have it before your afternoon siesta, but avoid having it before the budget speech tonight at 7:30 p.m.
That'd never put you to sleep.
No. Look, speaking of the budget, because obviously it is a big day, we've got a really interesting chat coming up after the show with Charles Croucher, Nine's chief political editor.
Yes. Now, Charles is about 6 months into the job and, a very, very capable political analyst. He tells us what he thinks is going to be in the budget, but also what it means for the government and its political capital, where Peter Dutton stands in all this, and then what happens after the budget as far as the voice. And, his point really is that it's just going to get a bit tougher for the government. It's really well worth a listen.
Yeah, it's a really good chat. It's coming up a little bit later on. The main story this morning, though, Sean, Westpac yesterday outlined a $4 billion half-year profit, sending its share price up 2%. But like the other banks, Westpac warned that profit margins have peaked.
It was a pretty good result for Australia's third largest bank and second largest home lender. Earnings for the 6 months to the end of March were up 22%. But Chief Executive Peter King gave a warning that the impact of higher interest rates is starting to bite consumers. He said Westpac is preparing for an increase in hardship levels as the full impact of 11 interest rates kicks in. Like his counterparts at National Australia Bank and ANZ last week, King said home lending was extremely competitive, while the result was better than some analysts had expected, in part because Westpac has been able to keep a lid on costs. The net interest margin, the difference between what Westpac offers depositors and receives from borrowers, peaked late last year, although it seems to have stabilised rather than falling sharply. Hence, the bank did pretty well yesterday in terms of its share price performance.
Sean, Westpac's an interesting one because it had some pretty bad press a few years ago, and it was self-inflicted after it had to pay some huge fines for breaching anti-money laundering rules. Is that all over now?
Pretty much. The bank's in a much, much better position. In a sense, the ship has been righted, I suppose. Its balance sheet is stronger, very, very important in banking. It's almost through the process of simplifying its business. Now, it's sold 9 different parts. 9 different businesses within the bank have been sold. Profits are higher, so is the dividend. It basically allows the bank to think more about the future rather than righting the wrongs of the past. And that's pretty important. Now, I don't think Peter King, the chief executive, has a super ambitious goal for what the bank's to become. I think it just wants to keep that retail banking, business banking and institutional banking, follow that path. But, given the business he's in, it probably makes a lot of sense. He does talk a lot about doing more for the customer and really focusing on the customer. And that's kind of what Westpac's about.
All right. Now that Westpac's reported, we'll have a look later in the week about some of the big kind of trends and themes and what's kind of ahead for the sector.
Yes, exactly. In fact, I think we've got a great interview coming up with someone who's an expert in all that.
Yes, indeed. We'll have a bit more on that one in a couple of days. We've got to get through the budget first, haven't we?
We do indeed.
Yeah, you got to down your cinnamon and pineapple tea. That's a revelation, Sean. Like just the fact that you drink something as obscure as that. I mean, you've always had a bit of a reputation as a bit of a loose unit, a bit of a wild man, but
Listen, you haven't asked me at all whether it's nice, and I've got to tell you it's not. But I just bought a really big box of it, and I can't bring myself to throwing it away, so I'm just making my way through it.
What were you expecting? Cinnamon and pineapple? Like, oh, that sounds good. It doesn't.
Yeah, I know. Yeah.
Anyway, look, local markets. What happened yesterday?
The S&P ASX 200 closed up nearly 1%, it was 0.8%, to 7,277 points. Wall Street's strong performance over the weekend provided a pretty good lead-in, and many of the top stocks did well. Iron ore miners were particularly strong. BHP was up 1.5%, Fortescue Metals jumped 2%, Rio Tinto rose 2.5%. All the banks rebounded. I mentioned Westpac. National Australia Bank was up 2.3%, Commonwealth Bank 1%. Macquarie Group was among the worst performers, falling more than 2%, while Woolworths was off 1.3%. I suppose the trend yesterday was probably lithium stocks. The mood's really turning on the price of the metal. Now, the price of lithium is down about 70% over the past 5 or 6 months. So there are analysts out there saying that maybe that price will start rising again. Core Lithium led the way yesterday with its share price jumping 7%.
And what about international markets?
Generally, commodity prices are higher. Oil's trading around $76 a barrel. Gold's at $20.21 an ounce. The Aussie dollar continues its slow climb higher, well, at least against the US dollar. It's now trading just under 68 US cents. One exception to the better commodity story is iron ore. It traded below $100 a tonne for the first time since late last year yesterday. That's on the back of the faltering recovery in China and disappointing steel consumption.
Okay. We'll be back in a moment with the rest of the day's business news. Sean, of course, tonight is budget night, probably the biggest night of the year in Canberra, would you reckon? And cost of living relief is front and centre. But it'll also be a redistribution budget, kind of taking money from some programs to fund others.
Yes, and I think that's why the devil really will be in the detail of tonight's budget. The government has made it clear it needs to reprioritise some spending, so alongside winners will be plenty of losers. There's $17.8 billion in what the government calls savings and reprioritisations over the next 5 years, including $7.8 billion from the Defence Department. On the spending side, yesterday, Prime Minister Anthony Albanese said the government will spend almost $2 billion over 4 years, giving single parents an extra $176.90 a fortnight in welfare payments. The single parenting payment will be paid until the youngest child turns 14, up from the current cut-off age of 8. There's money across the economy with a focus on energy prices, the cost of living and healthcare. Of course, we find out all tonight when Treasurer Jim Chalmers stands in Parliament at 7:30.
And of course, Sean, that follows the budget lockup, doesn't it? And you used to do this all the time when you were kind of working in and around Canberra. How's that all work?
The budget lockup is a very surreal experience. You line up, you sign your life away, you give your phone over, and you go for 5 or 6 hours and sit there and read budget papers, and they are enormous, and you try and find the stuff that you're supposed to be writing on or reporting on. Then they bring the food in, inevitably sausage rolls, meat pies, a lot of lollies, and after about 3 hours you're bored. So you go for the food. And it's always the old grumpy journalists that seem to go for the food first. So if you see them going, you think, get in there before, while the pies are still hot, there's some left.
I love how you say that, pretend that you weren't one of them.
Yeah, exactly. Just walk past that. And then about an hour later, you're feeling really unwell because you've been there stuck in this budget lockup, eating lollies, pies. Oh, horrendous. Anyway, 2 hours later you get out and it's very exciting.
Sean, when I was studying journalism at uni, which was nearly 20 years ago now, I remember the lecturer was describing to us, who was a former journalist himself, and he was describing to us the budget lockups. And he said that a lot of the younger and perhaps more inexperienced journalists in there would just be waiting for one of the more experienced ones. And the example they gave was everyone would be watching, say, Ross Gittins, and just waiting to see his reaction. And then at some point, Ross or someone like that would look up and go, oh, yeah, this is a responsible budget. And suddenly everyone just goes, yes, it's a responsible budget. And they all just start preparing their columns and their articles after that, after getting the indicator.
One of the best experiences. So I used to be heavily involved in the Fin Review and also the Herald and the Age budgets. And a few hours into it, you'd get all the big hitters. So I remember at a Fin Review one, Laura Tingle, for example, now the ABC political reporter, was there. Alan Mitchell was the economics editor. You'd get a few people and say, so what's our line? We have to write an editorial on this. What's our line? And you see these really smart analysts having totally different opinions. And it was just great to watch. I mean, Alan and Laura, I can't remember specifically whether they agreed or disagreed, but those two, really smart people, and they just come at things from a different way. And it was actually hilarious trying to navigate your way to getting a Fin Review line or an Age line or whatever it happened to be. That was always a highlight.
I love the way you can have two people looking at the same data and they interpret it differently. They just use their own kind of experience and their own kind of lens applying to it. And you can come up with two entirely different stories.
Yeah. Oh, no. And I mean, Ross Gittins, you mentioned, he's been my mentor for many, many years, and he employed me initially, or one of the two people that employed me initially, and I've always stayed close to Ross. But he was great in budgets because whenever I was in trouble, I'd go to Ross and say, Ross, what does this mean? Help me out. And he'd explain it to me. He was great.
It's handy to have a mentor like Ross Gittins. Now, Sean, we better get back on track here. Investment analysts are upgrading their profit forecasts for Woodside and Santos after the government limited the increase of the petroleum resources rent tax in tonight's budget.
Yeah, so Treasury's recommended a plan which caps gas producers' tax deductions alongside tougher tax compliance measures. That's likely to raise $2.4 billion over the next 4 years. There were other options and they could have potentially raised much more money. So investors yesterday were pretty relieved with the news, pushing Australia's largest oil and gas company, Woodside, up 3%. Santos also did pretty well, 2%. I like the story because it just demonstrates how influential tonight's budget is. If Treasury had gone for a different option, Woodside's share price could well have fallen. Instead, it rose. It's very, very influential what happens inside the lockup tonight.
Yeah, sure is. Now, business conditions eased last month but remained strong, but business confidence has taken a tumble in recent months.
Yes, and this is the National Australia Bank Monthly Business Survey, which is very highly regarded. We know the Reserve Bank takes a good look at it. It's considered a very good barometer of how companies are travelling. It's showing that trading conditions are just starting to toughen up, though they remain pretty good. They're still well above their long-run average. Transport and utilities and mining are strongest. Construction is the weakest. That's kind of what's happening now. Confidence about the future, though, isn't very strong. It's worst in retail, wholesale, recreation and personal services, and finance, business and property. National Australia Bank Chief Economist Alan Oster yesterday said the confidence index was 0, meaning there's an equal number of firms optimistic and pessimistic. Labour costs, though, remain steady. That's what the survey shows. And price growth has come off somewhat. I think both those things are good news.
New housing approvals fell in March, with private sector home approvals 15% lower than a year ago.
Bad news for the construction sector and, of course, all those tradies out there who are already struggling with rising prices and slowing demand. The trend in approvals has been sliding for 6 months, and during March, there were some big drops in Tasmania and South Australia and Queensland. Western Australia was the opposite. It was the standout state, a big rise in approvals there. New South Wales and Victoria were also positive, but only slightly positive. And just quickly, Michael, before we leave the Bureau of Statistics, the number of new owner-occupier first home buyers jumped 16% in March. That is a relief, given that it had reached a 5-year low the previous month. Mind you, they're still about 22% lower than a year earlier.
Now, this is an interesting one, Sean. Australia's largest super funds have increased their investment exposure to fossil fuel producers in the past year, according to an activist research report.
Australia's 30 biggest super funds increased their exposure to companies developing new or expanded coal, oil and gas projects by 50% over the past year, according to research house Market Forces, which looked at default investment options. On average, companies that classify as heavy carbon emitters now make up about 9% of the default option investment portfolio among Australia's biggest super funds. That represents about $140 billion of retirement savings. According to a report in the Financial Review, Market Forces has repeatedly attacked Australian super funds for greenwashing and failing to use their influence over fossil fuel companies they invest in to help drive climate action despite their own pretty ambitious environmental goals. And of course, the corporate watchdog ASIC, the Australian Securities and Investments Commission, has also warned super funds to ensure that claims and promotional materials relating to investment products don't constitute greenwashing by misrepresenting green credentials. Now, I must say, I don't know exactly the methodology here, but when you have energy prices going through the roof, if you have an investment in Woodside, suddenly its share price goes up so that your investment as a proportion of the portfolio gets bigger. So it's not a simple process to reduce your exposure to fossil fuels sometimes.
All right. One more, Sean, before we get to we've got some big international news we want to talk about, but briefly, rare earths miner Lynas has lost its appeal in Malaysia against new rules which will force it to move all refining of radioactive materials offshore.
But Lynas did have something of a win, with Malaysian Prime Minister Anwar Ibrahim confirming that the Australian Rare Earths Group will have an extra 6 months to comply with the new licence conditions at its Malaysian rare earths plant. Now, that was enough to send the miner's share price up 12% yesterday, which was the best of the top 200. Lynas said it will pursue further legal avenues for review, adding it had made significant investments in its Malaysian facility and it wants to be treated fairly and equitably as a significant employer and contributed to the Malaysian economy.
Okay, turning to international news now, and Russia has started evacuating hundreds of civilians from occupied areas in southeastern Ukraine, including families with children from a town housing workers at Europe's largest nuclear power plant.
The evacuations that started over the weekend come as Russian officials accuse Ukraine of stepping up drone strikes on its territory and in Russian-occupied Crimea, according to the Financial Times. Russia, in turn, has in recent weeks increased its own drone and missile attacks on Ukrainian cities. Now, the partial evacuation of 18 frontline settlements is officially due to increased fighting in the area, but analysts are worried it has something to do with the nuclear power plant, which Russia took control of in March last year. 1,552 people, including 632 children, have so far been relocated from 2 frontline cities and 5 districts. Well worth keeping an eye on this one, Michael.
Yeah, that sounds very, very worrying, that one. How about this? US President Joe Biden's approval slid to a career low in the latest opinion poll for ABC News and The Washington Post. It also shows the US leader lagging predecessor Donald Trump in early voter preferences for the 2024 election.
The percentage of those approving of Biden's performance fell to 36%. That's 6 points lower than in February, according to the survey. Around 56% of respondents disapproved of his performance, while 68% regard Biden, at the age of 80, as too old for another term. On the question of whom voters prefer for 2024, only 44% thought that Trump, who's 76, would be 78 then, as too old. Participants also rated Trump's physical health and mental acuity higher and perceived the former president as having done a better job handling the economy when he was president than Biden has done in his term so far. What do we say about that, Michael?
I think it's better not to say anything, Sean.
Yeah, let's just move on. Tell the news.
Indeed. The boss of IBM, Arvind Krishna, has said out loud what many of us suspected. Working from home could be detrimental to your career.
And the irony in this, Michael, is that IBM, which has a massive cloud computing business, has probably benefited enormously from the rise of remote work. Anyway, Krishna said he's not forcing any staffers to come into the office just yet, but those who don't would be hard-pressed to get promoted, especially into managerial roles. That's according to a report on Bloomberg. He said managing people is tough when you're out of the office because you just don't get to see your people enough. The debate seems to be coming down to CEOs arguing that workers, particularly younger staff, need to be on site more often for learning and mentoring opportunities, while other CEOs and experts say workers are happier and even more productive when they have the opportunity to work from home. One benefit to coming into the office-based staff spend 25% more time in career development. So, Michael, the moral of that story is that you specifically need to get into the office more.
I just don't think it's going to happen, Sean.
I can confidently say this story will make not one iota of difference to you.
I'm a semi-professional hermit, and I've got no desire for that to change.
Yeah.
Up next is the Fear and Greed Daily interview. Today, you are speaking with Charles Croucher, Chief Political Editor of Nine News. What I like about this interview, Sean, is the fact that Charles is only, I think, the third person to hold that job in,
40 years or something?
Yeah, because he had obviously Laurie Oakes and then Chris Uhlmann and now Charles Croucher, and he's doing a fantastic job.
He is doing a fantastic job, and it's just a great chat about tonight's budget as well as what happens after tonight's budget.
Now, very quickly, Sean, because I know we're running out of time, we have a Mia to talk about very briefly, our most enthusiastic advocate. And it comes after we mentioned another listener by the name of Maria last week who enjoys listening to us, and she enjoys our use of the English language because English was not her first language, and she learns a lot listening to us, which is worrying, very, very worrying. But Carl wrote to us and he said, "Hi guys, same as Maria, English is my second language and you're the only podcast I find interesting about business and economy in Australia."
Carl, thank you very much. Now, is this the one that has the side business?
Yes.
The Wollongong, the bakery?
Yes, he does. And he actually sent us through some pictures.
Yes. Now, I'm sorry. The word, Carl, I need your help on this one. The pronunciation of the word Canele.
Canele.
Fantastic. So it's a French bakery, Canele in Wollongong. I'm going to have to, my little Canele. Next time I'm down that way, which will probably be some sort of children's sporting event, I'm going to seek it out.
Yeah, good one. And anyway, thank you very much for listening to us, Carl, and thank you for being a most enthusiastic advocate of Fear and Greed. And if you or someone that you know is a very enthusiastic advocate of Fear and Greed, please drop us a line, send us an email through fearandgreed.com.au or follow us on one of the many social media platforms on which we are reasonably active. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 9th of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. Stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, "Alexa, play the Fear and Greed podcast." To catch the latest episode, you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.